Hello, good morning. It's Wednesday the 4th. I'm FX Blue and this is the market brief. So Boris has been on. He admitted that dealing with the rising cost of living is beyond the capabilities of his government. He said that using public funds to try and offset the increase in energy prices would be impossible given the size and scale of the problem. He refused to consider a windfall tax on energy companies. That's despite record profits as petrol and gas prices go through the roof. BP made £6 billion in Q1, which was a record and has certainly stoked accusations of profiteering. Johnson acknowledged the threat posed by rising inflation, but with the independence of the Bank of England being what it is, that means that dealing with rising inflation is also beyond the capabilities of his government. Partying during lockdown though? Well, that's well within the capabilities of his government. Glad to see that he's got his priorities right. So the MPC meeting starts today. Expectations are for a unanimous 9-0 vote and another 25 basis point rate hike, which will be confirmed tomorrow. The key focus tomorrow, though, will be Bailey's press conference and any indication he gives over future monetary policy. Any suggestion of a pause to the current rate tightening cycle will confirm further divergence in monetary policy with the US and will probably cause sterling to sell off further. Yesterday we regained a little lost ground against the dollar and we topped out around 125.65, but we were unable to hold on to those gains and we opened this morning around the 125 mark. And we are around 118.85 against the euro on the open. But the main event today will be the Fed rate decision. We're expecting them to confirm the 50 basis point rate hike over in the US, and they were also expected to start to reduce the size of the Fed's balance sheet by selling off about $90 billion of assets a month. That's after their assets ballooned as they pumped additional liquidity into the market during the pandemic. But from there, it's pretty much downhill to the weekend, right? Don't be daft. We've got Non-Farm Friday and the sweepstakes. And that all happens before you can clock off for the weekend. So while the market definitely has one eye on the Fed today, they're keeping one eye on Friday's employment data as well. Yesterday we had data for job openings, which was pretty much unchanged from March at about 11.5 million job openings. Given that we're expecting non-farms to confirm around 400,000 new jobs have been created, this data suggests a revolving workforce moving from job to job. Morning. Otherwise, we would see job openings fall. Now, that usually means that people are moving jobs for higher salaries, and that adds to growing concerns of wage inflation, which is something that the Fed will be very keen to address at the earliest opportunity. The dollar index took a breather. That failed to make a new high yesterday. We topped out at 103.65 and closed around 103.50. And euro dollar this morning, that opens at 105.20. That's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.